Hello and very warm welcome to all of you. In this edition of Public Forum, I'm Anurag Punetha with you. Indian stock market is in the news and it touched sky high on Monday as well, as the bulls have been on the run as bears took control over many stocks like IT and the metals. On Thursday, Sensex touched 50,000 marks and now 52,000 marks has also been achieved. Budget boost, economic revival, positive corporate earnings are probably the reasons that is pushing stock markets to the new high. As we know that the domestic stocks have been on a dream run with several stocks from IT, banking and the financial domain exceeding expectations on a daily basis. Shares of auto companies have also performed exceptionally well. And on the global front, Japan's Nikkei led the way. It climbed 1.9% to reclaim the 30,000 point level for the first time in more than 3 decades. And in Europe, shares scaled 1-year highs on Monday with the pan-European stock 600% up to the 0.7% as well. So these are the indications. What does it mean and what does it tell as far as the condition of the Indian economy is concerned? We are going to discuss in this edition of Public Forum. Joining me are the two guests, Mr. Santosh Tiwari, Senior Economic Journalist. Very warm welcome to the show, Mr. Santosh Tiwari. My second guest is P. Pullarao, Economist. Very warm welcome to you as well, Mr. Pullarao. Mr. Santosh Tiwari, would begin with you. Well, these headlines crossing 52,000 marks for the first time, gaining 610 points probably. How do you like to react and what does it tell as far as the Indian economy is concerned?
Anurag, the whole world and also India was reeling under the pressure of COVID. So the economy, you saw that the economic growth, GDP growth recorded historic lows. And now from there, in the post-COVID world, the expectation is that the government, the RBI, the central bank, will work in tandem and bring Indian economic growth, Indian GDP growth to a 7-8% GDP growth rate level in quick time. That's a high ask. But if you look at the two events which have happened, in last 2 weeks or so, first one was budget. So budget gave an indication that government is doing two things. One is that, they are not hesitant of spending money.
Yeah.
Even if it is coming at the cost of high fiscal deficit, which is 9.5% for the current financial year and projected 6.8% for the next financial year. And though economic survey has said that India will become fastest growing economy again in 2-3 years, it is yet to be seen that this high fiscal deficit trajectory will continue for how long. But that is a separate issue altogether. The indication of government that it is growth focused and how? By increased spending, and even if it is coming at the cost of high fiscal deficit, as I said, and also on the back of continued reform measures. Okay. So if the government in the budget has announced that it is ready for strategic disinvestment, which is privatization of 2 public sector banks, it is ready to enhance insurance FDI limit from 49% to 74%, which was due for quite some time, then these are indication of big bang reforms continuing post-budget also. Okay. So that gives a lot of confidence to investors and common public also about growth. The other thing which has happened is that RBI and government both are working in tandem towards growth. So RBI's mandate is to keep inflation 4% plus minus 2%. Yeah. So that has been achieved and that has been going on for quite some time. But the biggest indication, the positive indication which RBI is giving continuously is that it is ready with the steps, with the measures all the time whenever required to support growth. So fiscal and monetary policy working together in tandem is one big positive in the current context. And the RBI has indicated that the accommodative stance with respect to interest rate will remain. So all the factors coming together post-budget is giving clear indication that whatever economic survey has projected, that India will again become fastest growing economy in 2-3 years' time, it is expected, which means that then you will again go back to a sustained growth, GDP growth, track trajectory of 7 to 8% for next few years, certainly. So that kind of positive sentiment is giving indication to investors and everybody that yes, India's growth is on the right track. And that is where, all the sentiments in terms of foreign investors, in terms of domestic investors, and also companies, all those people are thinking and taking the economy into that direction. So this positive sentiment is at the back of what you see in the stock market or what you see in the investment arena.
Okay, Mr. Pullarao, I mean, from despondency, I mean, the 6 months earlier to now, this what we say, this when everything is looking hunky-dory, over the past few months, we can say the domestic stocks have been on a kind of a run, a kind of a dream run, with several stocks from IT to banking and financials domain as well, exceeding exceptions on a daily basis. In fact, the shares of the auto companies have also performed quite well. I mean, are these the indicators or the reasons that the stock market touched first 50,000 marks, now 52,000 mark?
If you go back to September 2019, corporate taxes were reduced. Before the industry and economy could take advantage of that, we faced COVID in February, March 2020, and the economy declined. Now, sometime around November, when the economy reopened, the two things, outstanding things came out. One, that agriculture, which gives occupation to 40 to 50% of the people, had sustained itself. It grew, despite in all other countries, agriculture not doing well. In India, it did very well. And since it occupies such a large space of our economy, 40 to 50%, it had a great impact. Okay. Along with that, the IT sector also held steady. Right now, it's reaching $100 billion industry. The IT and software sector, strangely in the pandemic, it also grew marginally because of the way business is being done and the way the economies all over the world have changed, and remote work from home, all this helped. So these two strong pillars of the Indian economy, IT, software sector, agriculture, which occupy an immense number of people, have helped. So when the economy opened, they were ready to go, and they were already going. Along with that, as you have just mentioned, there was a lot of pent-up demand in various sectors, automobile sectors, two-wheelers, and even eight-wheelers, and every other sector. Then government, as you know, had given all these boosts at various times strategically. That also helped. So as a matter of fact, when the budget was announced, the economy was already running at a very good pace. It was very steady. There was great confidence. And the budget came along, as Mr. Tiwari has just mentioned. It was a growth-oriented budget. It was a very good budget. And they were ready to spend money. The fiscal deficit was growing. Everything was going well. Plus, at various times, which the government had injected money suitably, the finance minister herself said, listen, we didn't go by what other countries were doing. There was a lot of advice on you must spend more, you must do this. But we spent money strategically in medium, small-scale industries, other sectors to help people. And she revealed her strategy, which obviously is working. So that is one other small thing I would just like to mention. One of the leading brokerage houses, Morgan Stanley, which had earlier said that the stock market will go up in India, Sensex, to 55,000 by the end of the year, I think has revised its estimates that it will go up to 60,000. Now, these are international houses, world-reputed houses. Obviously, they are seeing the same rosy picture, a strong macros, strong economy, everything that we see. And therefore, I would say that maybe if all things remaining the same, it will go up. And then don't forget two other things. The vaccination program is going up. And of course, the reduction of tension on the India-China border also has become a very big factor in market sentiment. As far as stock markets are concerned, a very big input is sentiment. And sentiment looks very good. And as I just mentioned, the tensions, the external tensions are also coming down. And the new US administration, with which we have a lot to do with USA, sending people, lakhs of people to work there. The visa regime is going to become more flexible, more work is there, more business is there. But the earlier tensions have come less. Just one more point. You know, long-term capital gains. Earlier, people used to hold on to shares, not sell them. But now there's very little difference between short-term capital gains, long-term. So people don't mind selling out. If there's to be made, a profit is to be made. So this also may be a good factor in thinking why people are ready to sell shares to make a little profit, then go back again. So that also, I believe, is one of the factors where we have a very dynamic stock market, and it looks like it's going to go on increasing for the rest of the year.
Okay. Mr. Santosh Tiwari, you talked about the sentiments and especially the way the government is also pushing the things. But can we say that this news of effective vaccination, development of this effective vaccination can be also be the reason? Because I still remember the few days ago when announcement of the pharmaceutical giant Pfizer claimed that its COVID-19 vaccine is almost 19% effective. And it was considered as the reason behind this market chaos that is happening currently across India and across big countries.
See, Anurag, this whole vaccine thing, prior to that, you have to understand India's response to COVID-19. And now it has been well established that this approach which India took, both in terms of, saving lives and livelihoods, has come out winner. So what did the Indian government do? And it has been explained quite well by finance ministry officials. They hedged their bets, So they prepared themselves, the Indian government prepared itself for the worst and took measures which were balanced measures and not at one go. So if you take the case of saving lives, what the government did was a lockdown. And then easing of lockdown slowly but steadily, and again reaching to the economic activity levels which were there.
Okay. I'm stopping you here, but just for we have to take a short break here. Then we'll come back and we'll also talk about some other positive things that probably pushing the Indian economy or let's say the Indian stock markets to the new high. We are going to take a short break and we'll come back. We'll discuss further things. Welcome back. We are discussing Indian stock market, which has touched a sky high on Monday as it has touched and crossed 52,000 mark. Yeah, Mr. Santosh Tiwari, we were talking about the way, the speed with which the Indian economy has recovered from the crisis. We were talking about the important implications of this development.
Yes, Anurag. So, as I was explaining, the way COVID impact, has been tackled by the Indian government, that has succeeded and it has come out successful, and it is being seen by the whole world, And what was the strategy? The strategy was to hedge the bets, Do not do something, which is extreme. So even if you came out with stimulus packages, you came with stimulus packages in pockets, and that has helped. When you started tackling the health issues, the impact of COVID, then what did you do? You just went for a lockdown and then eased the lockdown in a graded manner. So this has worked, in favor of India. Now, when the whole approach has worked, then obviously, the way vaccination has been taken right now. India is helping other countries also. And the way India has planned and the way it is going, it is expected that, this vaccination thing also will substantiate the impact, the effort, which has been taken in the last 6 months or 8 months or so in terms of handling lives and livelihoods. And vaccine is playing an important role in that. If you see Indian economy, various sectors, various parts of Indian economy recovering and coming back to normal. Many parts of the Indian economy have come back to normal right now. And that is why you can see higher GST collection, higher GDP growth expectation, and higher capacity utilization also. Increasingly, capacity utilization of the industry is going up, and that's a very big positive sign. So vaccine plus the way Indian government has handled the whole lives and livelihoods issues, that has helped India come back strongly on the growth path. But let me tell you one thing here. The history, the past suggests that, once you are into a pandemic, then it takes at least 2 to 3 years or maybe 4 years time, to come back to normal GDP growth rate levels, which was pre-pandemic levels. So maybe, next financial year, you will see a jump in growth because your base is low. But as far as coming back to 7-8% sustained GDP growth level is concerned, it may take 3 years' time, 3 to 4 years' time.
In fact, the S&P rating agency has predicted that probably in 2022, Indian economy could grow up to 10%. Mr. Pullarao, what do you have to say about this? I mean, these predictions, these kind of things have also started coming in.
One of the things, economic management, public finance, that has changed over the years. You see, 1929-30, the biggest stock market crash, the biggest depression in recent history was there. After that, at that time, economists and governments were dealing with economies on a cyclical basis. There would be depression, then there would be revival, there would be a boom, bust, boom, bust. You know, that kind of cyclical situation was there for economy. But, you know, you would notice from 2008, when the last major stock market crash was there worldwide, economists now have new tools to see that it's not cyclical. And there's a very proactive government policies, or as Mr. Tiwari said, the RBI and others, who are able to use monetary tools, fiscal tools, sentiment, taxation, reduce taxes. Very sophisticated basket of tools are there with the government and the economic management teams to see that this doesn't stall. As we just heard, the pandemic, government handled it well. India also had great advantages. We have the biggest vaccine manufacturers in the world.
Yeah.
And therefore, the day this lockdown ended, we had 2 vaccines ready. And there's an immense health infrastructure in the country where they can vaccinate millions of people every day, because we are doing, I believe, 100 to 200 million vaccines every year in India in a very routine way. So India was uniquely placed, and as the pandemic has kind of slowly come down, the important factor is it should not come back again. There should not again be some other peak in the pandemic. And I think investors, industry worldwide feel that the government is tackling the situation well. And India has been able to control the pandemic. So the pandemic's impact on economic activity would be less. And now when you go back, then the government naturally has a much easier situation to deal with, more tools. And therefore, what we are now seeing is exactly that economic management is opening up the economy. Things are under control. The economy will not have ups and downs. And as everybody has been saying, we are now having a V recovery. You know, we have come down, but it's going up fast. And don't forget what I just said. Economics has become far more sophisticated now. There are far more tools in the hands of the finance minister. And the budget is not just simply a 1 year once document, as it was 40, 50 years ago, mainly telling you the taxes, income tax, other taxes. You know, every day the finance minister fine-tunes the economy, calibrates various other tools which are working, the RBI, the financial institutions, updates laws, customs taxes, GST, everything is watched. So I would believe that all these factors have helped. And as we just dealt a little earlier, our agriculture, our software, IT, and some other sectors have done well. Therefore, you know, we are in a good position. And stock market is an indication of the health. So, and as everybody is predicting, this is going to go up, provided all things remain the same, and the price of oil also should not go up beyond $70, $80 a barrel.
Santosh Tiwari, despite these positives, some of the factors are also being talked in media and social media. The petrol prices are rising, the gold prices has come down. But generally, it's a viewpoint that the Indian economy is probably poised to grow from Joe Biden's presidency. I mean, he has announced $1.9 billion stimulus package. But what would be the fate of the US-China trade war? And will it have a rippling effect on the Indian economy on this year, or let's say the next year?
Great question, Anurag. But prior to that, I would mention you one more thing about Indian economy or the budget, you know, that sometimes what you do is important, but what you don't do comes out to be more important, you know, and that is what has happened in this year's budget. So everybody was expecting that Indian government would be imposing some kind of a COVID tax on industry or individuals, super rich, you know, and government and you must give this credit to the government, that government decided against this. So no COVID tax was imposed on anybody, and government took the fiscal deficit on its balance sheet. So this was one non-step, which was the biggest step, in terms of reviving sentiments. So that we must remember, that government not imposing any COVID tax was a big positive sentiment booster. And coming back to Indo-US relationship, there are several areas, which are pending to be tapped in terms of Indo-US relationships. Energy is one big area where a lot of, opportunities and potential is there. Defense. There are several areas where the groundwork has already been done, and it is required now for both the governments to engage in some kind of a trade deal, because opportunities, if you want to tap, then even if you want to begin with a smaller kind of a trade deal, smaller kind of an arrangement, that would be a good idea, and reach to a proper trade deal. But the way groundwork has been done in last decade or so, it is right time now, and with Biden administration coming in, it is right time now to initiate the talks and move in a very positive manner towards some kind of a trade deal very quickly, and which could be escalated, which could be taken to a larger trade deal going ahead. And areas, as I mentioned, energy, defense, and several other areas, are there where this trade deal or this Indo-US trade could benefit both the countries. And the way China is getting sidelined, or the way there is an opportunity for moving investments from China to India, the way there are opportunities lying because of whatever is happening in China's relationship with the global trade order. There are increasing opportunities, for India and US to come together and look at those opportunities in a manner where both the countries benefit. Both the countries, businessmen, the foreign investors, and business, industry, and everybody benefits. But the basic minimum which is required today is, Anurag, that to capitalize on the groundwork which has been done, some kind of a trade deal is a must for India and US, and especially with Biden administration coming.
Okay, Mr. Pullarao, final question to you. How to keep this consistency? I mean, would it be a challenge for Government of India? And how do you see the trajectory of the world trade order, especially post-COVID era, when there is a huge trust deficit as far as China is concerned? In fact, there is some suggestion that the new US administration may seek to de-risk the world by reducing its dependency on China and considering the geographical advantage that India can offer somehow. So how do you see the future as far as this trajectory is concerned?
China depends on USA for its economy. USA depends on China. That's a given. They become so close. But then the last 3 years, we have seen a lot of differences, and it had a wide effect all over the world. European markets, European countries are trying to take advantage of the split, but they also know Chinese economy has to be controlled because there's an element of predation. Chinese being a predatory economic animal, they're taking over companies, they're taking over economic interests, and they dominate countries where they have big economies. Even Germany was not immune from the Chinese impact on its automobile sector. Therefore, strangely, when Joe Biden became president, everybody expected that within the first week, he'll tie up again with Iran and he will reverse all of Trump's policies on China. But that did not happen. Till now, Joe Biden has only said these policies which are necessary will continue. And he's continuing. He has not been over enthusiastic with China. And he has said many a time now in the last 2 weeks that China must change its attitude, its policies, and everything. So I would say that in the immediate future, China and USA will have differences. And this has become a national sentiment in USA, all across political opinion, that they must be less dependent on China. China has become the factory of USA and for the world. So the best way to do it is to shift some factories to other countries, and they're doing that. If you can summarize it, the same situation of advantages will be there for India. Can India take advantage of this situation? It should. And the government also seems to signal, it has allowed FDI to go up in the insurance and many other critical sectors. It has made foreign investment easier. Just yesterday, we read that Tesla is coming to
Yeah,
Karnataka.
I'm going to stop you because time is not allowing me to go further. But as you rightly said, but that could be a opportunity for India to take advantage as this global order is emerging post-COVID era. Thank you very much, gentlemen, for joining me and talking to us. So we can say the couple of the things that have pushed the Sensex to touch the 50,000 marks earlier, and now 52,000 mark as well. And that is a kind of achievement. And stock market, especially the people are rejoicing, knowing the fact that Sensex is showing the barometer of Indian economy. That's all we have in this edition of Public Forum. Thank you very much for watching.